Welcome to Financial Literacy. We will be using material provided by the FDIC, Federal Deposit Insurance Corporation. The first section we will discuss is called Bank on It. In this section, we will identify the major types of insured financial institutions, state the benefits of using a checking account, determine which checking account is best for you, identify the steps involved in opening a checking account, add and withdraw money from a checking account, determine two types of deposit accounts, and reconcile a check register with a bank statement. Banks are financial institutions that offer many financial services, including a safe place to keep your money. A bank is a financial institution that is run under federal and state laws and regulations. Banks make loans, pay checks, accept deposits, and provide other financial services. A credit union is a non-profit financial institution owned by people who have something in common. You have to become a member of a credit union in order to keep your money there. Whether you have a checking account now or in the future, a checking account is most useful when you are on your own. A checking account allows you to write checks and/or use a debit card to pay bills and make purchases. There are 4 key benefits of a checking account. 1. Better money management. 2. Convenience. 3. Safety. And 4. Cost. Using a checking account can also help you manage your money. When you write a check, deposit or withdraw money, use your debit card, or have checks direct deposited into your account, the bank calls this a transaction. You record every transaction you or the bank makes in your check register or app. The check register shows you how you are spending your money and how much money is currently in your account. Keeping a checking account can help you build a relationship with the bank. How well you manage your checking account may be a factor that the bank considers when deciding whether to grant you a loan. Having a checking account also helps prove you pay your bills on time. Checking accounts are convenient because they provide you with quick and easy access to your money. Using checks and debit cards can take the place of carrying cash. Also, having a checking account allows you to direct deposit money that comes to you from a job, the government, or other sources of income. You have immediate access to money that is direct deposited. Using a checking account can help you keep your cash safe. It is safer to use checks and debit cards than to carry large amounts of cash because you do not have to worry about your cash being stolen or lost. However, if your checkbook or debit card is lost or stolen, report it as soon as possible to your bank. The bank will protect you so that you are not responsible for any purchases you do not make. Keeping your money in an insured financial institution means your money is safe up to the insured limit. This means that if for some reason the financial institution closes, you will receive your insured deposits. The Federal Deposit Insurance Corporation, FDIC, is the government agency that insures deposits at banks and thrifts. The FDIC has an online tool called Electronic Deposit Insurance Estimator, or EDIE. It lets you calculate the insurance coverage of your accounts at each FDIC insured institution. Using a checking account is usually less expensive than using other services to cash checks or buy money orders. If you have a checking account, you can usually cash a check for free. Check cashing services charge a fee. There are 4 types of checking accounts. Free or low-cost checking. If you do not plan to write money checks, a free or low-cost checking account might be right for you. However, there may be a limit to the number of checks you can write in a month. Some banks offer special checking and saving account products for students. If it does, be sure to find out what happens when you turn 18 or are no longer a student. Specifically, what kind of account the bank will assign to you. Electronic ATM checking. This account usually requires you to use direct deposit. If you do not plan to use teller services often, an electronic checking account might be right for you. This type of account usually allows you to write an unlimited amount of checks per month without incurring a fee for each check you write. However, you may be charged for in-person teller services. Regular checking. With a regular checking account, there is usually a minimum balance required to waive the monthly service fee. This type of account usually offers unlimited check writing privileges. Interest-bearing checking. With these accounts, you usually have to maintain a high minimum balance in order to earn interest and avoid fees. The minimum balance is usually at least $1,000. Ask for a fee schedule that lists all the fees you may be charged for certain activities. Some of the most common fees include a monthly service fee, also called a maintenance fee. The bank may charge a fee each month just for having the account. Minimum balance fee. Some accounts may require that a certain amount of money be in the account. If the account goes below that amount, the bank automatically charges a fee. The bank may also charge you a fee to mail a paper copy of your bank statement if your balance falls below a minimum level. ATM user fee. You will likely be charged fees each time you use an ATM at a bank other than your own. Overdraft fee, also called non-sufficient funds NSF fee. It is expensive when you bounce a check. The bank will notify you if a check is returned to the person or company to whom it was issued because there wasn't enough money in the account. Your bank will charge you a processing fee for returned checks. Merchants might also charge a fee if a bounced check is used to purchase goods or services. Stop payment fee. If you lose a check or need to make sure a check is not paid by the bank for some other reason, you can request a stop payment. There is a fee for this service, and the bank may not be able to catch the check before it is paid. Before you open the account, be sure to answer these questions to get the account that is right for you. To open your checking account, you will generally be asked for photo identification, ID, usually a state-issued identification card, driver's license, passport, or perhaps even your student ID card. You might need more than one picture ID to open your account. This is for the protection of both you and the bank. Since practices vary, ask the bank which type of identification you need. Banks need to be sure that you are the person you say you are. Social Security number. This is generally used to help identify you and to look up your credit history. Banks also report to the Internal Revenue Service any income you earn on the bank account, as interest is taxable. The opening deposit. This amount could range from $1 on up, depending on which checking account you choose. Some banks will pay for your first box of checks, while other banks will charge you. Generally expect between $50 to $100 initial deposit. The bank may also offer you an ATM card or debit card. The bank performs account verification because it wants to make sure that you will be a responsible bank account customer and that no one is trying to steal your identity to open an account. If you have mishandled a checking account or have not been a good banking customer in the past, the bank may not want to risk accepting you as a customer now. The bank may access a system such as check systems to help assess your risk as a potential customer. If you are unable to open an account because of credit-related problems, ask your bank or reputable credit counseling agency if you are eligible for any second chance checking programs. These programs may allow you to open a checking account after meeting certain requirements, such as completing a check writing workshop. The bank will ask you to sign a document that is traditionally called a signature card. This document identifies you as the owner of the account. There are several ways you can access your new checking account. You can use your debit card to access information from an ATM. You can go inside the bank and speak to a teller. use your computer to access online banking, or use your phone or mobile device. Using your debit card to deposit money into and withdraw money from your account is known as electronic banking. Electronic banking uses computers to move money into and from your account instead of using checks and other paper transactions. Electronic banking includes ATM, automated teller machine transactions, debit card transactions, and electronic bill pay. Online banking, also known as internet banking, allows users to quickly access bank info via a secure website or banking mobile app, transfer funds between accounts, such as checking and savings accounts, view recent transactions, make deposits, and pay bills. A debit card resembles an ATM card, except the debit card displays a MasterCard or Visa logo. A debit card performs all of the same functions as an ATM card, as well as allowing you to pay for goods and services at locations that accept MasterCard or Visa. You may need to use a PIN number at these locations. PIN, Personal Identification Number. The PIN is a code that only you know that allows you to use your card at ATMs or to purchase goods and services. Here are some tips to protect your PIN. Do not tell anyone what your PIN is. Do not write it on your card or carry it with you in your wallet or purse. Keep a record of your PIN somewhere you know, but only you know. When using your PIN, make sure no one is trying to watch what number you input. A checking account generally has a checkbook, ATM/debit card, and a check register. A check is a written contract between you and your bank. When you write a check, you are asking the bank to take money from your account and give it to someone else. Each check is assigned a non-repeating number. Date. Be sure to write the complete date, including the month, day, and year. Pay to the order of. This is where you write the name of the person or company to whom you will give the check. Amount. You must write the dollar amount of the check in the numbers. Example, $750. You must also write out the dollar amount of the check in words. Example, 750 and 0 cents. After writing out the amount, draw a line to the end. This prevents anyone from adding to the amount. Your information, which is pre-printed on the check. Memo section. This area is optional. Use it to remind yourself the reason why you wrote the check. Signature line. Sign your name here. Your bank's fractional number. The name of your bank. The bank's routing number, your account number, and your check number. A check generally cannot be cashed until it is endorsed. To endorse a check, the payee signs the top part of the back of the check in ink. There are 3 major types of endorsements. Blank endorsement, the signature of the payee written exactly as his or her name appears on the front of the check. Special endorsement, allows the check to be transferred to someone else. Restrictive endorsement, restricts or limits the use of checks, can only be deposited. You use a check register to keep track of the money you put into and take out of your checking account. In the past, the paper check register was the only way an account holder could keep track of the money in the account between monthly statements. Today, many banks allow users to see their accounts online or on their phones. Let's take a look at each column of this check register. Number 1, check number. If you are writing a check, record the check number in this column. If not, leave it blank. 2, date. Write the date on which you wrote a check, made a deposit, took money out, or were charged a service fee. 3, description or transaction. Record items such as to whom you wrote the check, the reason for the deposit, or the location of the withdrawal, ATM or debit card. 4, payment or debit. Record the dollar amount of checks written, ATM withdrawals, or debit card transactions. 5, fee. Record any fees charged, such as monthly maintenance fee or an ATM fee. 6. Deposit credit. Record any deposits or credits made to your account. 7. Balance. Add any deposits or credits and subtract any fees, payments, or other debits to your account to get the new balance. To add money to your account, you need to make a deposit. Here are some ways to add money to your checking account: a cash or check deposit using a teller, an ATM deposit, a deposit by mail, or a direct deposit. When making a cash deposit with a deposit slip, you need to make sure the deposit slip has your correct account and address information, write the transaction date, add up the total of paper money and write the amount in the box marked cash or currency. Add up the coins you wish to deposit and write the amount in the box marked coin. Add up the cash and coin boxes to get the net deposit. You then give the teller your deposit slip and your cash. The teller will also count the money before depositing it into your account. If you run out of deposit slips, you can get blank ones at your bank. Make sure to write your name and account number on the slip so your money does not go into someone else's account. You will need to fill out a deposit slip when depositing checks into your checking account. If you deposit more than one check, make sure to correctly endorse each one and write the amount of each check on your deposit slip. Use a separate line on the deposit slip to list the amount of each check. If you have more than a few checks, you can use the back of the deposit slip to list them. You need to add up the amounts of the checks on the back of the deposit slip and transfer this total to the front. Enter this amount in the box labeled "or total from reverse." When you deposit your check, you can also receive cash back if there is enough money in your account to cover the check. Net deposit is the amount that will go into your account after you subtract any cash that you are receiving. Please note that the bank may not always allow you to immediately withdraw the money from a check that you deposited. Ask the bank when the deposited funds will be available for withdrawal. Direct deposit occurs when your employer or a government agency gives you your paycheck or other check electronically. You will not receive the check in the mail. In some cases, your payroll or benefits check statement is mailed to your home address. The money is immediately available when your bank or credit union opens. Some banks will not charge monthly fees if direct deposit is used. With direct deposit, you have one less thing to worry about because it is the safest way for you to receive your money. You can avoid the inconvenience and/or expenses of depositing or cashing a check. You have an easier and more convenient way to access your money. You take control over your money and your time because it is predictable and dependable. Signing up is quick and easy. Ask your employer for more details. Always remember to record the amount deposited in your check register. Mobile deposit. Save, print, or email a copy of the check when you make a deposit using the mobile banking app and the camera on your smartphone or tablet. Snap a picture of the front and back of the check, choose your account and amount, then submit. You'll also receive a confirmation so you know your check is processing. Keeping an accurate record of your checking account activity is very important. It helps you know at all times the exact amount of money you have in your checking account. To keep accurate record, you need to record all transactions. We have been very careful to discuss recording your transactions during this session. You need to be just as careful with your check register. You should keep all receipts so you can record the transaction. Record interest and maintenance fees. With an interest-bearing checking account, you find out the interest you received each month by reviewing the checking account statement the bank sends you. We will take a look at the statement in a minute. You will need to add this interest to your check register. A good time to do it is when you receive the statement. Record the interest in the deposit credit column of the check register. With a fee-based checking account, you can ask the bank the approximate date it will withdraw the monthly fee from your account. You should record that fee in your check register. The content, format, and layout of checking account statements vary from bank to bank. Let's look at a sample checking account statement. Your bank's name and address, the time period covered by the statement, your account number, your name and address, a list of all transactions by date, including all cash checks, all deposits, withdrawals, debit charges, fees, and interest, a list of all cash checks in numerical order by check number, and a summary of account activity for the month. The bank will generally prepare a statement for your checking account once a month. The statement lists all the transactions that occurred during the preceding month. These transactions include checks you wrote that have been cleared, been cashed or deposited by the person to whom you wrote the check, all withdrawals and deposits made, debit card purchases, and any fees that the bank charges. The statement is generally mailed to you. Many banks also provide these statements online. You may even be able to ask the bank to forego sending you a paper statement and just make it available online for you to download. Be sure to review your statement as soon as you receive it, particularly to look for errors or transactions that you did not make. If you notice something amiss or have any other questions about your statement, be sure to contact your bank's customer service representative immediately. When you get your monthly checking account statement, there usually will be a difference between the statement balance and your check register balance. These differences occur because you did not record fees and interest in your register, you forgot to record some transaction on the bank statement in your check register, or some transactions in your check register were made too late to be recorded on the bank statement. How to reconcile a checking account. Write an ending balance from your bank statement. Add credits or deposits not on your statement. Total lines 1 and 2. List checks, withdrawals, and debits made but not shown on statement. Total outstanding checks, debits, transactions. Subtract line 5 from line 3. Results should match the checkbook balance. It is extremely important to keep an accurate balance in your checkbook. If you write a check without enough money in your account to cover it, it is known as writing a bad check or bouncing a check. Writing bad checks can have very serious consequences for you. Each bad check might cost you a fee of as much as $30. Additional checks you have written might not get paid. This negative activity can be reported to an account verification company such as Check Systems or Telecheck. This can make it difficult to cash or write checks and to open an account. Your bank can close your account and send a negative report to credit bureaus, and the amount of the overdraft and fees might be reported to a collection bureau. Writing a bad check when you know it is a bad check is a crime in every state. Each state has different civil and criminal penalties, such as fines and jail time. For this reason, if you ever do mistakenly write a bad check, make sure to correct it as soon as possible. Many financial institutions offer courtesy overdraft protection or bounce protection plans so that your checks do not bounce and that you do not overdraw your account. With these plans, you will avoid the merchant's return check fee, but you still will have to pay the financial institution a fee for each item. These fees can be costly. Also remember that, unlike an overdraft line of credit, with bounce protection there is no guarantee that your bank will cover your checks, ATM withdrawals, and debit card, and other electronic transactions that overdraw your account. You must protect yourself. If your checkbook or debit card is lost or stolen, immediately contact your bank. If you know it has been stolen, file a police report. Banks usually do not hold you liable for any fraudulent charges. However, some fees may apply. Thank you all for coming today. I hope this will get you started on managing your money.